What's going on, everyone? We saw a big shift in the market today. Tesla stock got absolutely clobbered and a bunch of stocks fell down with it. But unfortunately for Elon, Tesla stock was not the only thing that exploded for him today.
To rotate, we should have had separation by now. Obviously, this does not appear to be a nominal situation.
Yeah, it does appear to be spinning, but I do want to remind everyone that everything after clearing the tower was icing on the cake.
Yeah, Mike, that is insane. I cannot believe that it ended up crashing like that. SpaceX obviously is a big company that Elon Musk owns that does space exploration and stuff like that. They're kind of talking about going out into outer space, but they're not publicly traded. But what is Tesla. And Mike, Tesla took a big tumble to the downside today. It blew up just like that rocket there. They call the rocket Starship. I don't know what we could call Tesla today, but definitely was not a Starship. That was a big drop down to 160, and we were actually above 180 last night. So I cannot believe that we're down this low. I'm not surprised given the margins and everything like that, but it really took an impact and toll on the overall market. That heat map was terrible. Pretty much all the tech stocks fell besides Google, and then pretty much all the other bank stocks fell, healthcare stocks fell. The only stocks that did well were safe havens like Walmart, Costco, Home Depot, and some stocks like that. But man, Mike, what a crazy day for Tesla. I cannot believe that they're down as low as they are today, even given the bad news. I just didn't think that they'd get this low, but you know, I guess market makers were probably expecting a big move too. I know some of those puts did pretty well today, but at open when, you know, Tesla started ripping back up, it was a stark contrast to where they closed.
You see, what's interesting is that early on in the day, a lot of stocks actually tried to move to the upside. Like, look at the S&P 500 intraday. It was actually green from open to like basically the afternoon. But then everything just like gave up and ended up selling off in a pretty major way. And Tesla was actually one of the few stocks that was just straight down basically all day long as a bunch of selling pressure came into play. As you said, investors are not a huge fan of how much their profit margins are shrinking, obviously. And the thing is like when you look at Tesla on a daily chart or really any of these other tech stocks especially, you know, a lot of them are pretty overbought over the past couple of months, and you know, a pullback is on the way in my opinion. So I feel like yes, we're seeing a lot of selling pressure right now, and coming into some of these other big earnings reports over the next couple of weeks from, you know, Apple, Microsoft, Meta, Google, Amazon, and all those stocks, I think, you know, if those earnings reports are anywhere near Tesla's, that can bring in a lot of extra selling pressure and a lot of panic.
It definitely can. And, you know, as you said, those stocks, I started looking at like Microsoft's daily chart, and from the beginning of this year to where we are now, they're up quite a bit, just like Tesla was. Apple's also pretty overextended still. Look at this huge move. I mean, they're even better than Tesla. You know, Tesla was actually a little bit shaky over the past couple of weeks. You know, they started kind of moving sideways here before these earnings came out, probably because somebody probably knew that they were going to be bad, Mike. I mean, how many articles did we see and talk about saying that these margins were going to suck? And what did they do? They came out and they were terrible, way lower than people thought and way lower than the last couple quarters. So definitely not good. And I actually saw an article today where Elon talked about cutting prices even more. So I can't believe it, Mike. It just sounds like it sounds crazy to me that they'd keep cutting it. Maybe it'll still help them out in the long term. But looking at the S&P 500, it's really it's been on a very nice uptrend. And I'm with you. I think that we could start to fall off to the downside, and some of these stocks that inverse the S&P 500 might start to do pretty well soon.
I completely agree. So if we look at ETFs like SPXS or UVXY or SQQQ, that one's always a tongue twister for me, but SQQQQ, basically these stocks just blast to the upside when there is panic in the market or just other stocks are selling off. So basically when everyone else is panic selling their stocks, these stocks actually have a lot of profit potential to the upside. So I will also have a very close eye on, stocks like SPXS because, as we could see from previous dips from like, let's say February to March of this year, we saw a 33% move on this one from the low to high, which is pretty good.
Yeah, it really is. And, the S&P 500 is really fun to play. People love to play SPY and, that could do well, if you play puts and stuff like that as well. But with SPXS, you could even just buy shares and get a nice 33% pop. Imagine how much some of those options probably went up on this one. So it's insane. Some of these stocks can get some pretty good moves up. And with Tesla and all these stocks starting to fall off, just keep these on the radar. And Mike, I'm even going to keep my eyes on gold. I think gold could be a pretty good stock too, or GLD. Obviously, GLD is also pretty overextended in the short term, but if we get some downwards momentum in the market, GLD might go up as people have some fear. That's one of the big things I look for whenever fear comes in is gold to rise. So hopefully we keep seeing this happen as well, and that'll just help out some of the commodities out there.
Good stuff. Tom, I have to tell you, looking at the market right now, out for the next couple weeks, I do think we are seeing a pretty big and long-awaited shift happening. Basically, the two big tech earnings that we saw so far this week from Netflix and Tesla did not necessarily have good reactions. They were not like the worst case scenario, but they definitely weren't that great. And over the next couple of weeks, we're going to have even more influential earnings from all of the major stocks that everyone talks about in trades, like Apple, Microsoft, Google, all those stocks. And, I know I already said part of this, but, if those earnings come in anywhere close to Netflix or Tesla, I do think we could see like a multi-week or maybe even multi-month, depending on the severity of, a downtrend.
Yeah, exactly. And, I'm looking at a lot of these stocks like Google here, and it's like, they are down a lot, obviously, over the past couple years. And, looking at them right now, they're bouncing off resistance and starting to, look like they're going to fall down. I'm not necessarily looking for them, to crash and burn. I know a lot of people, Mike, are out there and they're saying the system's collapsing and all these crazy things. I don't really think that's going on. I think that it's just right now, just a lot of stocks are just overextended. And, I'm looking at Google here, and I just feel like, maybe a nice, like you said, a nice multi-week move down, maybe to test that $100 support. That could be pretty big over the next couple weeks, maybe even lower, maybe down around 95 or even 92 to 90. And maybe test some of those lower supports down there. I'm not really expecting like a huge, collapse of the overall system or anything like that, though. I know a lot of people out there are getting really scared because of the banks and everything like that, but keep in mind that even though Netflix and some of those other stocks are doing bad right now, we did get those positive bank earnings, which gives me at least a slight glimmer of hope out there.
True. Good point. And, just a minute ago, you were talking about, some of these overextended stocks. And in my opinion, one of the most overextended stocks right now is Meta, and it's overextended to the upside, which is actually one of the top plays for me tomorrow. This stock had just a hell of a run over the past couple of months. Right now, it's lingering right around $213 a share. And just a couple months ago in November, this stock was trading for $88 a share. So it's like pretty overextended, and that's not necessarily a bad thing. Like, I actually own Meta for the long term, and I'm going to continue to own it. But it's like when you have 150% pop just over the course of like 5 months or so, it's like, all right, that's a little bit too much. So in the short term, I am definitely looking at Meta for, some, puts to the downside.
Yeah, I am with you, Mike. Meta's been one of those stocks that is way overextended. I am definitely watching that one to the downside as well. Another one to the downside for me is actually going to be poor old Zoom, Mike. I have to say it. I feel kind of bad for Zoom right now. It looks like they're actually getting close to lows of this year. I'm actually watching for a test of that, maybe down to around 64 or so. I think that could be a pretty good move to the downside. Man, they just cannot get anything going right now. And if they actually end up breaking some of these lows, I'll actually be watching for a bit more of an extended sell-off to the downside with them. Unfortunately, they just keep falling off, and I'm kind of hoping that they start to bounce off some of these bottom supports down here. So I might even look to sell some puts over the next couple weeks on them. as well. But for tomorrow, I'm still looking at some downside movement.
All right, sounds good. Another setup I'm watching pretty closely is SPXS. I know we touched on this one just a couple minutes ago, but this thing was up at like 2% today, which isn't that much. But when that panic selling starts to come in, this thing knows how to pop. So like, let's say the market is down 1%, this should be up around 3%. And let's say the market's down, 3%, this should be up around 9%. So it does the exact opposite of the market and basically multiplied by 3.
Yeah, and I love this one, Mike. This is one of my favorite ones. And what I really like about SPXS is you don't even have to play the options on it. I was actually watching it today. I was looking at some of the options on the chain, and I noticed that the volume wasn't as high as, some of the other stocks out there, at least whenever you go out, a couple months on the expiration, like maybe out to June or something like that. So I do feel like that this one is more fun. And I love trading it, even just for shares. I think it's an amazing stock to the upside. Like we said earlier, on that last dip back in February, it kind of ran up like 33%. So definitely gets some good movement. And while this one goes down, it's SPXS kind of following the S&P 500. I'm actually just going to say it right now. I'll just watch the QQQ to the downside, Mike. I think this is going to be a huge play to the downside over the next couple months. The QQQ is seriously overextended from the beginning of this year. From that 260 support up to the recent high, QQQ ran up around 23%. That's a pretty big move. And even over the past couple months, very significant as all these big stocks like Apple and Google and other stocks like that move up. I'll definitely be watching puts on QQQ, obviously, as we start to move back down. I know this sounds like we've just been repeating ourselves tonight, Mike. It's like every stock's to the downside here, but that's how it is whenever the bears rush in like this.
Well, Tom, you haven't even seen the momentum plays yet. It's going to get worse. Well, with that being said, let's get right into them. So with the first one, we actually have Apple, and you guessed it, to the downside.
Yeah, exactly. 165.50. That's a pretty big support here from today, even pre-market, and right around the end of the day, nice double bottom. If we break below 165.50, watch for some intraday puts.
All right, with the next one, we have AMD, also to the downside.
Yeah, I will say AMD did a lot better than a lot of other stocks today. I will say it surprised me, but that's because TSM exploded early on and sent the chip stocks flying up. But if AMD falls under intraday support right at 89.50, watch out for those puts.
All right, with the next one, we have Meta, also to the downside.
META, go ahead and watch for them under 212. That's a pretty big support there. There is even a couple bounces right around 213, but I think that we'll probably break that in pre-market if we have some good Momo.
All right, sounds good. So you guys heard the levels from Tom. If Meta, AMD, and Apple break below those levels, we will be watching these stocks for potential day trades to the downside tomorrow. And Tom, the big/smart money is, as you guessed it, puts today. So we had $2.1 million go into the DRI 140 strike put options, and this expiration is far out. It is the January 17th of 2025 expiration. Like I said, $2.1 million. So this is essentially a trade where, someone's betting $2.1 million that DRI will fall in the future. One thing that's worth noting is that this options trade does have a lot of time. So it has until January of 2025, but that doesn't necessarily mean that the trader will hold this play until then. They could get out of it tomorrow if they wanted to, but they have until January 2025.
Yeah, this is a pretty crazy play, Mike. And I'll say, with the economy and a lot of people talking about, obviously consumers doing a little bit worse and stuff like that, I'm really curious to see how some of these companies like Darden does. Darden, for anyone who doesn't know, actually owns Olive Garden, Longhorn Steakhouse, Cheddar's, the Capitol Grill, Bahama Breeze, and a few others. That's a pretty big thing. Longhorn and Olive Garden, I think, are fairly popular all throughout the country, if not even the other ones. I know there's a few around me, but, it's just like those leisurely activities, right? if the economy does bad, sometimes those leisurely activities don't do as well. So I could see this one falling down. It's definitely overextended right now. That was a big run ever since last July, Mike. I mean, this thing's been on a pretty good uptrend. It ran from 110 all the way up to 156.
Yeah, that's the thing. It's like the stock has been holding up pretty well over like the past couple of years, but at the same time, it's like, just like you said, like if the economy gets worse, I would say this company has a lot of downside potential, because just the industry that they're in, and in COVID, of course, they got absolutely clobbered.
Yeah, and I know COVID probably won't happen again, but I know like right now there's just a lot of issues throughout the economy and people probably won't be spending as much. And this might be a down summer. Obviously people love summertime. They love to get out and go do things and have go to activities and etc. It might be a down year for stuff like that as people try to save. And I know a lot of people trying to buy houses and stuff like that right now are having issues, obviously, with rates so high too.
Yeah, and one thing I want to add really quickly is when I mentioned COVID, like obviously I don't really expect COVID style thing again either. But what's worth noting, just like you said, Tom, it's like, with the economy itself getting worse, that affects this industry especially hard because people go out to eat less, and then also these restaurants have higher food costs and higher rent and higher wages and a lot of higher expenses. And if we're being realistic, going out to eat is not like a necessary thing. Like that's something that normally gets adjusted pretty quickly for a lot of people during like recessions and just hard economic times.
Yeah, it really does. And I know you can save a lot of money at the store. I know a lot of people probably, I wonder how like, Sam's Club and Costco and stuff like that are doing. Maybe people, try to get stuff like that. Talking about Costco, Mike, I mean, look at that explosion today. It maybe something's going on. People are trying to save some money right now.
Yep. All right, Tom. Well, for tomorrow, I actually will say I think it will be the most exciting day of the week, price action wise. Of course, you can't take away from Tesla earnings yesterday, but in terms of price action, the movement we saw today, plus all of the like trend adjustments that we saw today, I think we actually are set for a pretty volatile week. When the market started selling off in the middle of the day, it wasn't a light sell-off. It went from like 413.50 all the way down to like 410.25. So that was a pretty decent sell-off, and we haven't seen that type of price action, at least to the downside, in a little bit.
Yeah, I know. It was pretty good to see that, especially in the middle of the day. Like normally we keep gapping down right now as all these earnings come out in after hours and stuff like that, but it was good to see that move in the middle of the day. Like you said, it might have actually changed the trend. And whenever I'm watching the SPY here for the next couple of days, I feel like if we could get back under this big 410 area here, that would maybe be like the big area where we'll start to see Apple and some of those other stocks start breaking below some of their key supports as well. But that was definitely a bad day today. I hate to say it, but we're probably in for a multi-week downtrend here. And I think tomorrow, like you said, we might finally get that big continuation because all throughout this whole week, it seems like every time we fall, we blast right back up and vice versa. So hopefully this time we get a good continuation.
All right, there we go. If you guys are new to the channel, make sure to subscribe. When you subscribe, you'll see our videos recommended to you more often. And last but not least, huge shout out to today's member of the day, Fiva. You've been in the chat for over a year now, and you've been having some decent activities. So definitely make sure to keep it up, and huge shout out to you. Besides that, guys, let's end the final trading day of the week on a great note.